Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Coach Podcast. And yes, we're back on video once again. So if you're just listening, you might be missing out. So head over to YouTube or Spotify to check out the video versions of it. Today's episode is going to be a fun one, but also a really important one. We're going to dive into trading indicators, but not in the way that you might expect. We're not just talking theory. We're not just talking strategies that work. We're going to answer a much more interesting question, at least interesting to me, and that is, which trading indicator does the public, you guys, actually favor the most? And let me tell you how the whole thing got started, right? We were in the live trading room, as we usually are, 3 days a week, and I got asked a question from one of our Tier 1 trading members, Akil. What are your top 3 indicators, right? And if you know me, I'm not a really big indicator person. I have experience with a lot of them from just experience in the market and experience developing strategies. But as far as my personal use on the charts, I tend to keep it simple. So I was trying to think about it and I gave about 2, but kind of brain farted on the third one. Then later on, because of course, the algorithm is always listening, guess what popped up on my feed? It was a question from a trader that I highly respect in this industry, Stephen Burns, asking the question openly, "Dear trader, what is your number 1 trading indicator?" And well, after combing through over 150 answers, really questioning why do I do this and what is my point here, I wanted to come out and give you the top 5 that you guys, traders, voted on. And at the very end, hopefully I don't forget, I'll double back around and actually share my opinion on what are my top 3 indicators. And don't worry, I've also finally figured out what my third choice would be, and it was actually right in front of my face the whole time, and I feel quite ashamed for forgetting it in the first place. But here's a clue, it's rather new as far as what I use in the market. And for you guys that know me, let's see if you can guess what that is. Now, before we get into listing off the indicators, just want to share my opinion on indicators in the first place, right? Understand that there's a big difference between being popular. There's a big difference between being effective. There's also a big difference between me asking the question, what is your favorite indicator, and asking the question, what is the best indicator? Now, you would never hear me ask any type of question that says, what is the best? Because my philosophy on the market, and if you ask any professional traders' philosophy on the market, aside from like the extremely egotistical ones, there is no such thing as best in trading, right? What is the best? Technical analysis or fundamental analysis? There's no answer to that. What is the best? Classic price action trading versus indicator trading. There is no answer to that. What is the best indicator? The MACD versus the CCI. There is no best. There is no best anything in trading. We can go time frames, we can go market, we can go hours of day, right? What matters in trading most is not that you find the best, it's that you find the best for you, right? When is the best time frame for you to trade? When is the best, or what is the best asset for you to trade on? And when it comes to indicator, what is the best indicator for you to use? And in my opinion, this is going back into coach mode, but this is the Trading Coach Podcast. So I I guess I could do that, or I guess I could suggest anyway. What I would suggest is this. You want to build your trading strategy around your personality, meaning it's around your philosophy on the market. It's around something that you value, something that you actually believe in. Once you understand how you want to attack the market, for example, do you want to be a trend continuation trader? Do you want to be a counter trend trader? Do you want to look for extensions? Do you want to look for reversals? You then want to pick an indicator that supports that. And the thing is, most indicators can be used in various ways. And when you research them, you're going to hear about the traditional way to use them, where it says like, hey, moving averages are an indicator that supports the trend. So you should only look to use them as a filter to keep you in the direction of the overall trend. That could be the case, but moving averages could also be used as counter trend methods as well. So, just understand that with whatever indicator you use it in a way that supports what you actually want to do. And at the end of the day, if you can do that, you're going to be able to find the indicator that is the best for you. Now, into the top 5. I guess before we go into the top 5, there were a lot of answers. Again, 150 plus comments, right? The coffee was strong to stay awake. I want to go through a few that were actually left out. So let's talk about the top 3 that didn't make the cut. So number 1 that was left out, I guess not number 1, but it would be number 8. So anyway, the first one we're going to talk about that was left out was Bollinger Bands. This was interesting. We've been having a lot of discussions on Bollinger Bands on the platform lately. We did a private Q&A session on Monday talking about them, and Bollinger Bands are a great example of how a single indicator could be used in many different ways. You can look for price action to hit the extremes of the bands and break and close outside of them, and that could be a counter trend trading sign where you expect a reversion to the mean, so you expect price to come back in within the bands. You can use it as a trend continuation way as well, where if price breaks back down to the moving average in the middle, that could be your entry reason to play price to a retouch of that band. You could be a breakout trader with Bollinger Bands as well, where if we break above or below the band, you then buy expecting high volatility and a continued move to the upside. So not to get too deep in there, I promise I won't do this with every single indicator, but it's fresh on the mind. But Bollinger Bands is one that was left off. Another one that was left off was volume, right? And volume in different ways. There is your anchored volume profile. There's your traditional under the chart volume. But volume was another one that almost made the cut, just missed by like a single vote, but didn't quite get there. And then this is the most surprising of them all, because traditionally, and I'm old now in the trading game, so maybe traditional doesn't mean anything anymore, but traditionally this indicator was always known as the most popular indicator. I've never actually used it in a serious way. I've played around with it and used it to answer questions for the traders I work with, but I never actually used it in my trading. But this one would be the MACD. The MACD was right below the top 5, did not make it. Sorry, MACD, you have fallen. Sorry for you guys. I'm going to be unprofessional and get a swig of water real quick because my voice is hurting. All right, now into the top 5. And understand that some of these aren't going to be technically classified as indicators. So before you get all in the comment section and the mentions and stuff like that, I'm just taking what the people voted on. There were some other ones as well that were kind of way off. Like someone said, a bunch of people said my eyes, which I would agree. Your eyes are probably one of the best indicators, but I don't think that should count in this category just because it's a little bit of a reach. So number 5 is going to be Fibonacci, which is surprising. I am a fan of Fibonacci. They are not the backbone of my trading, but being a harmonic pattern trader, they are very important to me. And for the longest time, I got laughed at for being someone that used Fibonacci. Akil, it's black magic, it's voodoo. The markets don't actually respond to it. But if you ever take some time to deep dive into Fibonacci, and if you are going to do that, I highly suggest that you actually take time. Like you may want to just clear your schedule for the weekend because you're going to go down all types of rabbit holes and literally figure out why rabbits produce or reproduce in the way that they do. That is Fibonacci. See, it's starting already. But you're going to find out some weird stuff about Fibonacci. You're going to start measuring your elbow to your wrist and your wrist to your finger, and you're going to start seeing 618 Fibonacci retracements and 382s and look at that weird picture where the guy is like that. It's going to take you some places. But no matter what we think about Fibonacci, we can't deny that this magical sequence of numbers not only exists in real life, right, in our everyday life, but because it exists in our everyday life, it also exists in the market, right? If it exists to us as normal humans and the market is just a visual representation of all of the actions that normal humans and bots that are programmed by normal humans are taking, then it does make sense that it would all kind of flow together. Now, there was no specific mention of what Fibonacci, the traders were using, but I would assume the basic Fibonacci tools, your Fibonacci retracement tool, which is a tool that is used to predict the retracement level. So after price comes from an extension, it creates a pullback, a retracement, and these are numbers that are used to predict how deep that retracement will be. And then there's the Fibonacci extension tool, which is the exact opposite. You use that to predict where the next wave, where the next trending move will extend to before it starts to run out of steam. So I'm happy this made the cut. I'm a Fibonacci user. Did not expect this at all to be in there, but look at that. We're at number 5. Mama, we made it. Number 4 is also one that I use. This is going to be the RSI, the Relative Strength Index, right? The RSI is not the reversal strategy indicator, which is something that I thought when I was a new trader, even though it's commonly used as a tool of identifying when the market is in an overbought and oversold condition. The RSI is a momentum indicator. It tells you when there is a lot of momentum or strength in the market. It tells you when that strength is getting weaker and weaker. There are many ways you can use the RSI, and there's a book that I always tell you you should never read, and some of you read it anyway, and I can't find it. Oh, this one right here. It's Dusty, The Complete Guide. I hope you guys can see it. RSI, The Complete Guide by John Hayden. If you ever want to look for alternative ways to use the RSI, there are many ways that will melt your brain in there. Do not recommend that to newer traders at all. That's why it never gets mentioned whenever I do podcasts about my top whatever book recommendations. Do not read it. But it's a great example of showing you how it can be used in different ways. It could be used to find reversals or loss of momentum using overbought or oversold. It could be used to find kind of exhaustion points in the market by using divergences. It could be used to find continuation opportunities in the trend by using hidden divergences, right? Shoot, it could even be used to define the trend. Seriously, I've worked with a trader, brilliant mind, David Alcindor, who used the RSI to determine the trend in price action before even looking at the price chart. And that was a method that John Hayden mentioned in his book. Now, one of you guys in the comments section, Chris, did mention that, and I work with a Chris, and I'm curious if it's the same person. If not, it's really cool because a lot of people don't know that method, but you can play different, you can play the bounces between the different levels, and it can actually tell you if the market is bullish or bearish. So many different ways to use the RSI, which is really cool. So I'm glad it made it into the top 5. Number 3, this is one that I agree with 100%, but I don't really think it should fall into this list, but I included it in this list because as a bigger teaching perspective, I think it's important to understand how popular this is and how more traders believe this than you would think. But price action. Now, price action isn't an indicator. It's not something that you go to your indicator tab on and throw into your chart, but it is an indicator as far as it indicates your buying and selling behaviors in the market. Maybe it's a stretch there, but I included it because I was so happy to see that in a world where everyone is looking for the shortcut in an indicator. I don't know why I did 3 and 2 here. In a world where everyone is looking for the shortcut in the indicator, which isn't actually a shortcut because finding the optimal way to use an indicator is very, very difficult and time consuming and frustrating, and it will make you pull out your hair, right? Yeah, you can see. But price action is still key, and it was cool to understand that most people understand that indicators are lagging. All indicators are lagging, right? If you have one that's not lagging, you can let me know, or you can type nothing below because there is none, meaning that your indicator is based off what happens with price, right? Even price is technically lagging because your candlestick chart doesn't print until orders have come in. But again, not down that rabbit hole. But I do think you should value price, and I do think your indicator should support what price action is doing. That doesn't mean that you can't have a fully indicator-based strategy. You certainly can, but you just need to have the understanding that your indicator is confirming something that you see on the price chart, right? Versus the other way around. Number 2, and I'm going to combine this a little bit. This is going to be either VWAP or anchored VWAP. I'll just throw it all in the VWAP category. And this is a new one for me. VWAP, if I remember correctly, volume weighted average price. There we go, volume weighted average price for VWAP. And essentially what it does is it gives you kind of, it's similar to a moving average, but not like a moving average. It gives you an average price based on not just price, but also volume as well. And I believe traditionally it was mainly used for like just intraday trading, meaning it would give you like the range of the day or the session, and that's what the VWAP would print off of. But as it evolves, and I think anchored VWAP is this way as well, you can actually choose the individual session. So, you know, where a moving average will start at the forever of time, you could actually set the VWAP to measure a very specific portion of price. Again, I'm not an expert on this, but I am somewhat familiar with it. I read a book 2 years ago by Brian Shannon, my colorful book series, Maximum Trading Gains with Anchored VWAP, the perfect combination of price, time, and volume. So if you do want more on the Anchored VWAP, make sure you check this bad boy out. It's become a very, very, very popular indicator, at least from what I've heard on the streets, over the last 3 years specifically. Not that it hasn't been popular within kind of the trading realm for a very long time, but as far as like the public grasping it, it's picked up a lot of steam. So no surprise that it's number 2. And number 1, drum roll. Brrr, you probably know what it is because I left it out. What does everyone like to have on their charts? Moving averages. Moving averages are number 1. Now, not going to spend a whole time on moving averages. I just did a video a couple months ago called, I think, 3 simple ways to use moving averages. Give me a second. I had it up at some point. It's called Moving Averages Explained Simply. What is the best setting? And I think we talk about different ways to use moving averages. I apologize if we don't, but I'll link that video at the end of this podcast. You can check that out. But moving averages can be used in many different ways. There are many different versions and variations of moving averages, but the most popular reason that traders use moving averages is to confirm the trend, right? Meaning that if you have a single moving average, if price is above that moving average, it is in a bullish trend. If it is below that moving average, it is in a bearish trend. If you have double moving averages, you can look for them being spaced out to give you a sign of a strong trend, them being skinny to give you a sign of a weaker trend. If they're crossing, I don't know how to do it with my hands, crossing back and forth a lot, you're in consolidation. If one crosses the other, the small crosses the big, that could be a sign of reversal in trend as well. So lots of different ways to use moving averages. No surprise, that is number 1. Now, what you've been waiting for, my top 3. And I didn't think about what order I want to put them in, but I suppose I should give you an order of my favorite indicator, and understand these are personally based off my trading and what I used. One that I was surprised, I guess it was on there, didn't receive a lot of votes. Do I want to put that 2 or 3? No, okay, so number 3, volume, specifically horizontal volume or anchored volume profile. This was a tool that I learned about in another book I'm going to share with you somewhere. Haha! There we go. I should really figure out where I put these things. In a book I want to share with you called A Complete Guide to Volume Price Analysis by Anna Cooling. Really good book. Not just, it's very simple to read. Very good book on explaining both your traditional volume and your anchored volume profile. And also, this is a really good book if you want to understand the secret price action behind price action, how big banks and institutional traders do moves to bait traders into doing their own moves so that they can take advantage of those traders and profit while you suffer. Great book for that. But I forgot what I was going to say about volume now. Volume is new to me. It was something that I hated at the very beginning of my trading career. And I looked back into it probably about 5 years ago now. I have no idea what year it is, but probably I think either right after COVID, I think it was. And I had a new opinion on it. And I was open and I learned something, and I had no intentions of using the anchored volume profile. That was just kind of like a bonus in the book that I was like, oh, this is cool. But I actually fell in love with it, did a year of study with it, and now it is something I use in a regular basis in my trading. So because it's the newest, and it's I need it the least, meaning I think I can do just as good of a job. I know I can do just as good a job as I was trading without it for so long. Without it, and then I can with it, but it gives me a little bit of extra comfort and does allow me to do kind of small little changes that are just increase my edge by a little bit. So that's going to be number 3. Number 2 is going to be, this is tough, the RSI. I'm a fan of the RSI. Sorry about that, talking to traders in the background. I told you I'm an RSI nerd. We already went over the millions of ways to trade it. It is the one indicator that you really see on my chart if you ever see any of my videos. And then number 1 is going to be the ATR, the average true range, which is a volatility indicator. Now, This is interesting. You won't actually see the ATR on my chart because I don't use it as a chart-based indicator. It doesn't need to be there aside from making my chart look pretty. But the average true range is something that I use in every single one of my trades because I use it to project my stop loss. And we spoke about risk management. We spoke about how important having a stop loss is. Yeah, that's very important. Now, technically, I can probably calculate the average true range without having the indicator. So if you force me to get rid of an indicator, maybe that would be the first one, but that would take a lot of time. It'd be very frustrating, a lot of math. I might have to hire someone to do it, which is going to cost me money. So it's much easier for me to just have it on the chart. Now, I shared with you the public's top 5 indicators. I shared with you my top 3 indicators. Here's what I want for you. I want you to share with me your number 1 indicator. You can only choose one. Don't list a bunch of them. Let me know what your number 1 indicator is and what you use it for. And I look forward to reading through these comments. So I hope you guys enjoyed the podcast. Hey, if you ever want a free trading computer builders or buyers guide, click the link or scan the QR code, whatever I'm showing you at the time. It's an awesome guide. It's free. I keep sharing it with you because I've used it and it's personally benefited me as someone who knows nothing about computers. So seeing how there are other people that probably don't know anything about computers, it should benefit you as well. And it's free, so check it out. All right, until next time, plan your trade, trade your plan. Take care.